Hey guys, thanks for tuning in. It's Hussein here, COO of Diversified Funding Services, and in episode 2, we're going to talk about what it is that we actually do here at Diversified Funding Services. Again, as we mentioned in the previous video, we're an invoice factoring company based here out of Fayetteville, Georgia, and we're going to talk to you a little bit about what it is that we actually do, which is factor receivables. So we're going to talk about what is factoring. We're going to talk about why somebody factors and kind of give you a little sneak peek and show you the process here at Diversified Funding on how it is that we go ahead and go about the factoring process from the time that our client submits the invoice to us to the advance, to the monitoring of the receivables and the invoices, to when it ultimately collects and what all of that entails. So hope you guys find this video informative. Again, if you do, we'd appreciate a like, we'd appreciate a subscribe button wherever it appears here on the video, and we really just hope that you enjoy this. So let's get into it. So what's factoring? Essentially, factoring is the sale of an invoice from a company to a third party, like a factor, like me here at Diversified. So why does one typically choose to factor? That's ultimately a decision that every business owner kind of comes to on their own. For the most part, at times it could be that you're sitting there and you need this working capital because you need to meet obligations. You need to meet the payroll and you need to pay the bills and you got obligations that you need to meet, and you're looking at your aging and you're saying, hey, wait a minute, here's some open invoices and I've done everything on my end. I've delivered the goods. The services have been rendered, but now you're sitting there for 30, 45, 60, sometimes 90 days to get paid on this. And this is where factoring as a tool becomes a great asset to your company, whether it's to relieve that pain threshold of not having the cash flow, or whether it's to grow the company and expand the company. You might have taken an order and that order is extremely large and you're not able to fulfill it because you don't have this working capital on hand. However, you're looking at your aging and you're saying, man, if I could just get these checks in, we'd be able to go ahead and fulfill that order. And again, that's where factoring kind of works. So what's the process like? The process is, guys, for the most part, pretty quite simple. You run your business just like you would any other day. You take your orders, you fulfill your orders, you deliver your goods, you provide service, and at the end of the day, you hand over an invoice to your customer. And your customer then has a due date, whether it's 30, 45, 60, 90 days. At the same time, what you would do if you were one of our factoring clients is you would take that exact same invoice, make a copy of it, of course, provide the factor with any backup documentation as well. So you'd want to provide me with a copy of an invoice, a purchase order, a timesheet if you're in the staffing industry, a bill of lading, whatever it is that you can submit to your factor that lets them know, hey, this is everything you're going to need when you go to verify that invoice or those invoices. A factor would then receive from you what's called a schedule or a batch. In most shops, and including here at Diversified Funding, you will have a point of contact. You will have an account executive, a relationship manager. That will be your go-to point of contact. This individual will deal with you on a day-to-day basis, from the funding to the credit monitoring and decision making, to the collection monitoring, to the online reporting, and basically is an extension of your back office. But we'll get to that in a couple of minutes. So again, you'd submit these invoices to the factor. Your account executive would then go ahead and take those receivables, upload it into the software, and then verify those receivables with your customer's account payable department. Typically, it's just a confirmation and a verification, just wanting to know that they're happy with the product, they're happy with the goods, they're happy with the services, that the invoice matches what they're showing in their system, and that the amounts match, and that it's approved for payment when those payments become due. Once that's verified, once that's confirmed, you'll receive typically either an ACH or a wire from us, your choice. And that's pretty much it as far as the funding side. While we wait for that invoice to mature and for that payment to be cut, Your account executive will deal with you on a day-to-day basis. This person is there to help you with any new orders that you're getting, and you want to go ahead and make sure that you're selling to a credit-worthy customer. Your account executive is going to help you make that decision. Let you know, hey, this new customer that just placed an order that's a really big amount, they're credit worthy. Go ahead, we're willing to factor that receivable. They're going to help you with the back office. As a business owner, you want to be out there and you want to be hustling and you want to be growing your company and doing sales. Our account executives, we're an extension of your back office. We monitor those receivables. We're not a collection agency. We're calling on behalf of your company, and we act no different than if you had somebody employed on your staff that was making a call when those invoices become due. Once those receivables do become due, they'll go ahead and they'll scratch that check and they'll remit that payment to the factor. So they'll remit that payment to me. I will go ahead and take those checks and go ahead and apply it to those invoices that check is paying on. You'll be able to get an online report that'll show you the check number, an image of the check, the amount that was applied to the check, and if there were any overages or dilutions on those checks. After that, you will get back what's called your reserve. And your reserve is simply the difference between what I originally advanced you minus my fee. So to make it simple, if we bought an invoice for $100 and I gave you $80 today, and you had $20 sitting in there, and let's just say that the fee was $2, when the payment came in and I charged my $2, you'd get back $18. That $18 is what's called the reserve. And that's pretty much the process, guys, from the time that it originates to you getting it to the factor, to your account executive dealing with your account on a day-to-day basis, to the collection monitoring, to when ultimately your debtor remits payments to the factor and we apply it and give you back the reserve report. So I hope it was informative. I hope it was a little bit educational. Again, if you guys have any questions, our phone number is going to pop up somewhere on this screen now. Please feel free to give us a call. Again, if you found the video informative, give it a like, give it a subscribe, and we look forward to bringing you more videos, and thanks for tuning in.